You're watching Stockwatch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Mark du Toit from Oystercatcher Investments and Grant Nader from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Thanks so much for your time, gents. This is not a new story because we've been seeing it at least once a week or once in 2 weeks where the PGM counters are flying. They've gotten on one of Elon Musk's rockets and they're on the moon right now. Valterra up 11% today. African Rainbow Minerals 9%, Northern 8%, Sibanye Stillwater more than 7%, Anglo American, actually even the diversified miners are in the green. Anglo American, I think I even saw Glencore at some point. Yes, what is bolstering the miners today, Mark?
Yeah, so very good day for the miners and for our JSE. I think it's more to do with Trump again wanting to put pressure on Jerome Powell to lower interest rates sooner, thereby weakening the dollar. The currency is always a differential between either interest rates or inflation rates or different risk and growth metrics. So if you want to reduce interest rates in the US, that weakens the dollar, and typically a weaker dollar environment is normally very good for commodities. At the same time, we saw, I think it was Goldman Sachs come out with a report today saying that they think that copper will be over $10,000 by the end of the year. So a couple of good things all at once. And copper was up, PGM's going up. I'm sure we'll discuss that in detail soon.
Yeah.
Good day for the mining stocks on the JSE.
The PGM miner said, "Daddy's home." I don't know if you guys have seen that clip anyway. There's a question, as Mark is talking about the weakening dollar. There's a question, I am considering a long position in USD ZAR. Is now a good entry price, or should I wait and hope for a little more downside before entering? Grant?
Well, if you want to go along with dollar, you're getting the best entry point you've had in years. And not just against the rand, but against most currencies. You don't often see the dollar weaken like this. It's sort of on a standard deviation basis. It's well beyond its mean, and I wouldn't get too cute. I mean, I think, it might still come weaker for another 3 months, 6 months. Who knows? Structurally, there are some issues, and there's noise. Added to the Trump noise was they might replace Jerome Powell. That added to the dollar weakness. But if you think big picture, just zoom out. Look at our inflation. Look at our growth rates. Look at our emerging currency status, and over time, the rand will weaken. But what's the starting point? I don't know. But this is one of the best you've had in a long time. So if you're an investor or you want to move money offshore, I would say start now. You don't have to do it all at once, but I would do some without doubt. If you're a trader, I would look at the technicals. I think you're probably getting a bit overextended on the dollar. And when it snaps back, there's a good trade to be had there. But just run it with a tight stop loss.
All right. Well, Mark, you did say, of course, that we'd be drilling into the miners and particularly the PGMs. There's a question on Sibanye Stillwater. Your view on the growth prospects of Sibanye Stillwater, both in South Africa and international. Is the share price right now just trading on the price of the underlying commodities and not necessarily the fundamentals of the company, Mark?
So Sibanye's got a lot of moving parts. They've got the South African PGM mines. They've got the South African gold mines. They've got palladium in North America. And then they've been adding the new kind of metals, lithium, which they're building in Finland. I think they've got zinc in Australia. So there's a lot of moving parts in Sibanye. And I mean, they've been going through a very difficult time. I mean, up until the last few weeks where the PGM prices have really rallied. I mean, they were sort of almost zero earnings. And they have a court case with regarding a copper mine that they were going to buy and then walked away from, and they're being sued over that. So that could be quite that could be a couple of billion rand, which they might need to pay out near the end of the year. It's been so what I'm trying to say is that they're very leveraged to the PGM prices.
Okay.
And obviously with the prices recovering, then their share price improvement has been, the best of all the miners, up the most. And we've gone from a balance sheet problem to if these prices hold, then they don't have an issue, and then they can carry on with their strategy and start to reinvest in their mines again. So yeah, a lot going on in Sibanye.
Yeah, I mean, Grant, would this be good enough for someone to want to nibble into Sibanye Stillwater?
Yeah, it depends on your risk appetite. I mean,
Okay.
as Mark said, and it's a rule of thumb with these miners, the more marginal they are, so the lower quality they are generally, the better they perform when metal prices go up.
Yeah.
You get this operational gearing that just suddenly switches on, and the profits just expand at a rate of knots. And of course, Sibanye, their palladium business in the US was Stillwater was they were shutting down production because it was actually unprofitable. They made a lot of poor capital allocation decisions. That balance sheet was under huge pressure. They were saved by some of the gold they had. And of course, now the prices have come to the rescue. The balance sheet's going to be transformed. And there's a real opportunity here. And the most important thing for me, I think what's made it more interesting is you've got a new management, a new CEO there. So a lot of the capital allocation and the strategic direction felt like spaghetti on the wall effect, throwing things and hoping it sticks in new metals and all that. Now you've got a focused management that's going to focus on, I think, getting the basics right. And I think there's a good opportunity here for this company to turn around. But it is not for the faint of heart. It's not my preferred pick in the PGM miners.
Okay, I'm going to use that spaghetti on the wall. Let's go on to Glencore. Also, had a good day today. Please, can you discuss the merits or otherwise of Glencore? And I think you spoke about copper and the forecasted price there. Mark, would this be, a good thing for Glencore?
Yeah, so I do like Glencore. So Glencore earns its money through its copper exposure, and then they also have a large coal and coking coal, met coal, which goes into the steel making process. Year to date, the share price has suffered because coal prices have been coming down. And obviously earnings impact on Glencore. But we're quite bullish the copper price. We do think that the world is going to need more copper. I mean, there's a lot of infrastructure projects rolling out. We see more spending proposed in all over the world, but also in Europe. And I think the copper price is going to be well bid. And so Glencore is going to benefit from that. And it seems like the coal prices, although they have kind of under pressure, they seem to be stabilizing around these levels. The Australian coal price, I think it's down 20% for the year, and South African coal price also off about 15%. So that's kind of all in the base now. So post the earnings reporting season, which is going to come in the next month or so, I think the prospects for earnings growth are looking a lot better for Glencore.
Grant, what would you be anchoring your investment thesis on a Glencore on?
Well, as Mark said, the copper exposure is meaningful. I think it was around 40% last year. Plus, their trading arm is, or their marketing arm, as they call it, benefits from this kind of commodity volatility. Remember, they've also got a nice green metal portfolio. They're a big cobalt producer as well. And yeah, it just needs coal to turn around. Coal has been disappointing, but I do think this is an astute management team. And if you think the coal prices and energy prices are at least going to flatline from here, if not turn up, and commodities do tend to move together over time. There might be lags, but at some point, if other commodities are all rallying and there's a higher inflationary environment, eventually, I would think coal or copper could join the party at least a little bit. And so there's opportunity there in Glencore. It is very cheap. All
right. Let's shift gears to Rainet. Of course, I think, when did it rally? On Monday or Tuesday? And it finally came out. I think from what I heard is that there's a company that is looking into buying the pension fund asset that they have. Mark, your view on the merits of Rainet. Would there be merits now if they actually sold that, which is basically the crown jewel?
I think it's a little bit more difficult now because we don't know what the offer is. We also don't know if it's Rainet that might sell its shares in PRCG, or if it's because they own about 50% of the business, or 45% of the business, or is it the other shareholders that's going to be selling their shares? So we don't know the answer to that. And even if it's a great bid or offer that comes for the business and Reinet does sell its stake, then what will they do with the cash? And they have been building up a private equity type investments, so we're not sure if the cash will go further into that. Yeah, so there's a lot of unknowns, and I mean the share price is already up. So I would hold if I had it, and I wouldn't buy it at this point.
Grant, I mean, what were investors excited here for, considering the fact that they were waiting to see what Reinet would do with the cash that they already had?
Oh no, I think the investors are excited for a see-through valuation on this asset, which is predominantly the main asset by a long way, and it's unlisted. So you've got estimates. I don't think many South African investors are very close to that asset and the merits thereof. But I would hate to see them sell it, because I think you're then left with a pile of cash, and they haven't shot the lights out with these private equity ventures that they've gone into. And so what is the business then? Then they must rather just pay all the cash back to investors and start again somewhere. So I would take the money and run if I was an investor, but I don't think I would do it if I was management. Let me rather say that. So yeah.
All right. Let's get into more questions. An interesting one coming through here for We Buy Cars. We Buy Cars might consider selling new cars. The stock since its IPO rose by more than 100%. What are the views of the guests? And so We Buy Cars has actually said it's not that they came up with the idea. They were approached by original equipment or some OEM companies saying that, you know what, maybe we should start considering selling our cars to you. I don't know. We Buy Cars is a used car platform now, including new cars in there. Grant, what do you make of that if that does come to fruition?
I think they'll do it well, as long as that's of a decent brand. Maybe some of these Chinese cars that are stealing so much market share. This We Buy Cars is a powerful platform. If you just look at the user numbers, you look at I think the average car is on the lot for 5 days, based on their turnover. They're expanding their parking bays by another 2,000 or odd this year. I mean, this is a powerful platform. I think it was underappreciated. I don't think it is anymore. And of course, they've got that financing partnership with Capitec. They've just got a lot of things right, and this is a network effect business. So the more you do well, the more you will do well. And so I think they've got a bit of escape velocity, and I think that'll be a good move for them and a tough move for the competitors, the other, the traditional car sellers, the vehicle sellers. So good move for We Buy Cars if they do it.
Yeah, I'm also thinking, I mean, would this have an effect on counters like Motus, Mark?
Yes, I think that a new competitor coming into the market with a big distribution footprint like We Buy Cars, it's not great news for Motus. I mean, they've already been struggling with the cheaper Chinese vehicles coming in and taking market share, and this would certainly be a further headwind. Yeah, and I mean, I think We Buy Cars is well placed to do it well. It'll be interesting to see if we could get any kind of further information on what the deal terms would be. Typically you don't want the OEM to have too much of a negotiating power over you, but I think in this case We Buy Cars is the one in the pound seat.
Yeah, okay, just to mention also, they're saying that this is very, very early. They haven't really given it much thought. So the discussions are very, very at its infancy stages. Let's get into Pick n Pay and Boxer. They both plunged today, which is, from what I've noticed, it's not something that they don't usually move in tandem. But today they were both in the red. Let's start off with Boxer. Why did Boxer dive so much today, Grant?
So I don't have a specific reason. I think the fact that they moved together should make perfect sense given how much of Pick n Pay's value is derived from Boxer. But why they moved specifically, I can't say. I think that space was under pressure. I think it wasn't. They might have moved more, but I think the other retailers like Shoprite, if I remember, might have also been down or at least underperformed the market today. And so I think you find a little bit of risk on when people are buying, when managers are buying new investments, maybe platinum or some of the other things that look interesting. You've got to fund it from somewhere. And so you might find they're selling out of the fuller priced or the more defensive food retailers and using that cash for some of the more risky or the commodity space, for example. That's just speculation.
Yeah. Okay. I mean, I do hear that perspective as well. And you are right. ShopRite's also trading in the red. Specifically, Pick n Pay. Mark, is Pick n Pay a buy at these levels?
I think at this level, they still have their holding in boxes, so that's becoming more and more valuable as the box share price goes up. And it really is a turnaround story. I think that the management team have had a credible performance so far. And yeah, I think that they will be successful ultimately in turning the business. And then you've also got the optionality that the box stake gives you. So yes, we like Pick n Pay.
Yeah, and I must say the marketing team is working overtime. They're now sponsoring rugby, and I also saw at the airport in Cape Town, they're all over the walls there. So yeah, very, very visible. There's an interesting question here. Who is leading on the fleet logistics sector? Who is leading between Zeda and Grindrod? The charts seem to rhyme or in time to a greater extent. Zeda and Grindrod in terms of fleet logistics, Grant?
I stand to be corrected because these companies are generally a bit smaller than our investable universe. But Zeda plays in the vehicle and fleet management part of it, so corporate rentals and things like that. As far as I know, Grindrod's logistics is somewhat different from Zeda's. I think they have slightly different operational, target markets. I stand to be corrected. And so I wouldn't say that any one of them stands out as a leader versus the other one. I think they are both operating across slightly different areas. But Mark, you may have a better perspective than me.
Yeah, Mark?
Yeah, so they are quite different businesses. And you're correct. I mean, Grindrod is more sort of more bulk logistics. They've got stakes in port operations, and the big opportunity for Grindrod is perhaps to get some of Transnet, or to get a deal with Transnet and to be able to operate some of the rail network. If they can improve the rail network, then they can improve the throughput through their ports, and that's really been the opportunity for Grindrod. And then Zeda is much smaller and more in the fleet management, car rental business. And it trades at a much lower multiple. So you've kind of got a value play in Zeda, and then you've got an opportunity in Grindrod. But interesting, in Grindrod, we just saw the CEO decide to leave and to go across to Kumba to be the CFO. So it was a bit of a strange one for us, because if you're sitting in a company, the CEO with great opportunity, it's a strange move for me to move across to Kumba. But maybe there's another opportunity for him there at Kumba longer term that we don't know about.
Interesting. Well, as we've always said, the show is not complete without a question on Sasol. So here goes. Please ask the panel if they expect a dip on the 9th of July on what's happening on the 9th of July?
The tariff expiry of the tariff deadline, the tariff delay deadline. So it's a Trump moment.
Okay, so the question goes, do you expect a dip on the 9th of July on equities broader? And then if so, perhaps wait to trade Sasol if equities do rally on the 9th of July, Grant?
So first of all, I would acknowledge there is event risk on the 9th of July.
Yeah.
However, Trump has a very strong habit of changing things midstream, last moment. So to sort of plan around it is going to be very difficult. Just make sure you have your balanced sort of portfolio or diversified portfolio that you can live with whatever happens on the 9th of July, and don't say, I'm going to plan a trade. Or you could plan what you'll do if there is a dip, by all means. But don't position around that in anticipation. It's not going to work. It's very difficult. You'll have to get very lucky to get it right. So I would think, if Sasol makes sense at this level for you, then have a look at it. It is cheap. He's probably cheap for a reason. I think at 60 it was a bit of a, you could actually argue strongly for a buy. I think here at 80, with oil price drifting a little bit, I have lower conviction. So yeah, I mean, I think I'm neutral here. I'm ambivalent to owning it.
Okay, I'm putting in my diary so that on the 8th of July, I actually sleep for 10 hours so that I'm fresh on the 9th of July.
Put your order in for the 9th. Put a 70 Rand bid in or something like that, you know?
I don't know, any kind of dip, whether it's the 9th of July or any other day, Mark, a dip in Sasol, would that justify a buy?
Sasol, for me, I think Sasol, obviously it's got a lot of gearing to the Rand oil price. So if you think the oil prices are going to go up or the Rand's going to weaken a lot, I mean, that would be good for Sasol. But I think a bigger part of the investment case hinges on chemical prices. They've got their big investment in Lake Charles in the US, and that's, if the chemical prices go up, then they're going to earn a lot more dollars. They can pay down their dollar debt, and for me, that is the key for Sasol. And to date, we haven't seen any evidence that chemical prices have started to go up yet. They're still under pressure. There's a lot of capacity still being built in China. So I'm sitting on the sidelines until I see evidence of that.
Quickly, before we go into your stock picks, I want to go into NetBank and like just the pressure that it's exerted on the financial sector, on the JSE. What exactly is it that investors that investors just didn't like about that trading update? I mean, I think on the day it was down about 7%, and it's quite interesting because I think the next day FirstRand came out with its own trading update, and FirstRand's actually been trading in the green. Grant?
Yeah, I think it was just a little bit on the disappointing side. The market, we know banks have a reasonably good base from last year, so they've got a hurdle to clear. But the market was looking for some growth. I mean, on those numbers, there might not be any growth. It might be a flat year or 1 or 2% low single digit growth. The transaction fee income story wasn't strong enough relative to Standard Bank. FirstRand you saw with a strong result. Capitec's been strong. So just less than the peers, and of course it's a relative game out there. They've had a decent run, and so as much as there's value there, how do you unlock the value? You need to see the returns come through, and you need to see some improving outlook. So I just think it was a disappointing relative to what people were looking for.
And that's actually interesting what you say, that there is value there, because you guys see value in, I guess, the whole banking sector, saying that it's cheap. But with these numbers, Mark, does that change your perspective on NetBank or not?
So NetBank's actually my stock pick for tonight.
Oh, okay.
So
okay. Well, let's get to it then. Let's get to it. Okay, there we go. Your stock pick, NetBank. All right.
Yes. So yes, I mean the market was very underwhelmed with their pre-close update, going to kind of flat earnings. Market, I mean, we were expecting sort of up 2 or 3, so it was a bit of a miss. But NetBank's in this difficult situation where they've got interest rates coming down, so that's reducing their net interest margin at the top line. And we haven't really seen the South African demand for credit come through yet. So they're in this kind of limbo period where revenue's a bit more difficult to come by and the growth is not coming yet. But I do think that the demand for credit will return. I think as interest rates, we'll get hopefully another 25 basis point cut will help. We've got lower oil prices, we've got low inflation. It's good for the consumer. Makes it a bit easier to afford debt, to pay down your debt. So I think that will still come through. And also, NetBank sits on quite a lot of excess capital. So on my calculation, they have 9 billion Rand, which they can do something with. They could either use it for share buybacks if the share price goes lower, or they could do a special dividend, or they might actually look at some other inorganic growth opportunity. So I think that that's an added bonus which you get from NetBank. I do think that the earnings will return to about a 5% year growth rate, and then they pay a fantastic dividend of about 8%. So I think there's a lot of good things going for it, and if the demand for credit does come through, I think NetBank will do well.
All right, nice. Where are you seeing value today, Grant?
I'm looking at Thermo Fisher Scientific. So it's a life sciences and diagnostics business. They do laboratory services and products. And it's been around a long time. It's a 70, 80-year-old company. It's high quality, but it's been under a lot of pressure the last 12 months, given all the noise in the US politics and around the healthcare system. And I think it's actually, and tariffs as well. So I think it's presented an opportunity to get into what has historically been a quality business over a long period of time. And so you're getting it at the low end of its 10-year valuation range. And earnings are under pressure this year, but I think that's the opportunity to buy it at an attractive multiple. And so that's my pick. I think with the 2-3 year view, you're going to do very nicely, or even longer. I think it's one of those sort of put under the pillow stocks. Thermo Fisher Scientific.
Well, let's go lay on our pillows at this point, Grant. Thank you so much for your time, gents, and for your analysis. Really, really appreciated. That is all for tonight's Stock Watch. Thanks to our guests, Mark du Toit from Oystercatcher Investments and Grant Nader from Benguela Global Fund Managers. Up next, The Close. Stay watching.